Hello, everyone. Today is July 13th, and this is the Tape Reading Lab together with William and myself. Let me just go through some of the administrative stuff really quick while we're still waiting for William to join us. So when we on our regular not summer schedule, then we usually conduct this class on Mondays from 9 to 10:30 a.m. Pacific. So please take a note. We will come back to this schedule on September 12th. But during the summer, we are on Wednesday schedule at the same 9 to 10:30 Pacific. And this is what we're doing today. Today is an open door class, so this is where we invite a lot of the people from a broader Wyckoff community or just a trading community to, come visit us, look at what we do, be with us for an hour and a half. Let's discuss the markets together, and let's kind of, see where it's going to bring us. Okay, so here's William. Okay, for those of you who are not the members of our community or not the members of this class, definitely after this session, consider signing up. We usually discuss the current market. We usually do a lot of chart reading of the tape, of the charts. We do a lot of tape reading exercises. We discuss some of the trades and so on and so forth. There are some limited number of questions. Maybe today we'll entertain a little bit more just because there are a lot of new people here, but usually it's kind of more of the discussion between William and I. William.
And good afternoon. Can you hear me?
Yes.
Fantastic. Good afternoon, everybody. And good afternoon, Roman. How are you?
I'm doing really well. How about yourself?
Yes, a little bit sad. Wimbledon is over now, so no kind of no early escapes, no more pins and strawberries.
Okay.
But
well, really briefly, what did you think about that Djokovic win?
I would have liked to have seen Kyrgios and Nadal in the semis, but
yeah, that was really disappointing.
Yeah, that was a match I was really looking forward to, but it's good. Djokovic is, he's a sportsman. He's very disciplined, but Kyrgios, I don't think he really showed up he didn't show up really. He wasn't venting as he did vent, but he needs a little bit more. He couldn't really get the crowd behind him in a way, and he kind of he needs that. But
well, I was watching a lot like this psychology between those two. Like Djokovic was like, so he seemed to be more emotionally composed to me.
100%. Yeah. He's a great player. He's a worthy champion.
Yeah. And then Francis kind of saying to you, William, well, you have an open starting tomorrow, so you have golf to switch on.
Yeah.
So it's all good.
Yeah.
Okay. Well, William, all of this is just introductions and so on and so forth. We already have quite a lot of people on the call. Why don't we switch to the market? Because this is why we're here, why we came here to discuss. This is what we love to do. William, why don't we start with the S&P, and why don't you give us a little bit of your view of how this low, specifically this low in the mid of June, and whatever comes after that, how do you interpret all of that?
Well, that is a good question, Roman. And for me, well, let's talk about this area first of all. We are oversold, okay? Within this demand line, within this trend channel. And on the approach to here, one could argue that this bar is kind of climactic. And then we have this bar here that doesn't really go anywhere. We hold from here deep in the oversold position. And again, it's hard to label this bar, but the point is we start trading back within the trend channel from an oversold condition. And importantly here, Roman, this selling is definitely the most aggressive selling we've seen from any of these kind of well, I mean, this is pretty aggressive here, but this really falls out of bed. And what's interesting about this here is one would expect this kind of selling to have some kind of downside continuation. But as we've noted, it kind of is climactic. So would you be thinking this is climactic here? Have a
Absolutely.
question? Good. We have some kind of, why with all this volume and this spread, we know there's a lot of hidden buying in this bar. And then there's no downside continuation. We hold. We have good buying. We trace this very deep. This bar is somewhat of an enigma here, Roman. There's an opportunity to come down, but ultimately the buys bring it back up, and we do close kind of firm. That kind of paves the way for higher prices in a way. And then we do rally. And first observation about this rally is, Roman, there's not a great deal of volume here. And I would say that's to be expected. Why? Well, because kind of this action over here would have exhausted supply. The climactic action, this kind of not stopping volume, but, no follow through from here, and we rally. And it kind of halts more or less where we would expect it to. But look at the following bar here. Look at the volume. Look at the spread. Effort versus result. As we're trying to break on through this structural level, we're immediately met with selling. Bearish effort versus result. And then we break on down. Slight pop in volume, no pop in volume, sorry. Then we just break on down, and then we halt. Now this bar, again, that is what I'd call some kind of stopping action. Okay, so if we're trying to react, the market should be reacting down here or this oversold condition, and it doesn't. Volume comes into the market once again. We get a nice little demand tail. The market holds. Okay, that's interesting. Shows a little bit of strength. That's what it shows. And then this bar here dips down, closes firm, lower volume, kind of ease of movement. You could label that ease of movement in a way. It's not clean ease of movement, but you understand what I'm saying here, Rome, due to the volume profile and the fact that it dips under this low to reverse and close firm with less volume. There's less selling friction. And then this, I would expect upside continuation from this bar. But then this bar, now we have 3 bars. This one dips down. So we have a trio of bars creating a support level here. And now we have the highest close. And I found that bar to be of interest. Now I'm thinking, okay, for whatever reason, the market is holding here and we'd expect a rally. Where's this logical place for the market to rally to? I'd say would be up here. Okay, but it doesn't. It halts. And the nature of this rally, I would say, look at this volume. It's the kind of the lowest volume up bar we've seen from over here, which you could argue kind of has no demand qualities into this area of supply. And of course, this action over here, Roman, is an upthrust of this level. And we have supply here, and we have all this high volume over here. So we know it's going to take volume. It's going to take market participants to break through this area. Sorry, if you'd like to clean this up, Roman. It's getting a bit messy. So we know it's going to take it's going to take volume to break through. Then again, what do we have? So this is an attempt to break, not as strong as this break. And then we were met with this kind of effort versus result. And again here, this time, this is more overt effort versus result because the volume picks up a little. Here it decreases. But you could argue due to the spread, we can see that the sellers are capping the upside progress here, and then we come back down, and this is what I find interesting, Roman. I would say that this rally is not as strong as this rally. I mean, we can see that in terms of that now the volume's kind of higher, the average volume is higher, yet the progress to the upside is thwarted, which means one thing: selling is present. And that kind of makes sense because if the market wants to go higher, it has to try and absorb some of this selling pressure to the left. But then, as we react down here, I'd say that this selling is actually of better quality than this selling. So, although the buying is deteriorating, the selling has deteriorating on this reaction down. But a little bit more information I'll be taking away from this, Roman, is this is the resistance level where the market should be testing to find selling, the logical place, but now it's coming a little bit earlier than expected. Why can't, if the market was uber bullish, why aren't we coming up here? Like, that's the way I'm interpreting this. And then today's bar, Roman, wow, due to the the priced in interest rate decision, or what is it, 75 basis points? We have this wacky bar from the US Open, which I'm sure we will have a look at. And now we are going to look at the volume already, Roman. We are going to probably print higher volume than this. And if I'm looking from a technical perspective, not taking in the fundamentals of the whys behind the move, if this market was trying to rally and it has this kind of bar with very high volume, it shouldn't be occurring if we're trying to move on higher. Why do I say that? Well, the sellers are in control. We're making downside progress, and it's the buyers that need to prove themselves. And to have this kind of volatility coming into this area, I would say it favors the sellers. Now, that's not to say, we still have the rest of the trading session to unfold, but I do think it will be quite an important bar because the volume will be extremely high. I would like to see the resolution. I want to see the close today. Now, for me, I would say that this is kind of an important area. These three little bars. I'm surprised we didn't test down there, but we still have the rest of the trading session. If we break this, we're going down here, which means now again, if we come down here, where are we? We're at a demand confluence. We're at the oversold condition, and we're at this support level. So as it stands at this moment in time, Roman, I would say the market is looking suspect or vulnerable to more downside continuation. However, I still need to see the resolution of today's bar.
Okay.
What are your thoughts here?
All right. Well, first of all, pretty good rant, so thank you so much. Secondly, I was about to ask you, after all of this analysis, like if you were to bet on this right now, and is there going to be a continuation to the downside of the last 3 days, or are we actually stopping here? Demand is coming in, absorbing, and then we're going up. And I think that at the end of your end, I kind of heard the answer to this, which is basically
yes, carry on.
Which is basically probably more to the downside rather than to the upside. Am I correct?
Yes, but there is one contrarian. Being a Wyckoffian, we're kind of contrarian at heart. And one thing that does play on my mind is that huge bar, that huge open today, or the huge down bar, 120 points on the ES on a 5-minute time frame. Could I don't like to label it smart money, but could the well-funded be positioning themselves in there? That's the only thing that that kind of plays on my mind from a contrarian standpoint. But if I was to analyze this purely from a price perspective and not know the reasons behind this bar or that bar existed, the fact that we have this shouldn't really be occurring if we're going to rally. I mean, we can see that the buying certainly has deteriorated, hasn't it? And even though we have the presence of the volume's increasing here, it's not achieving anything to the upside. Potential absorption, yes, but again, why aren't we testing the highs? Question mark. Again, it's the buyers that need to prove themselves, and there's an awful lot for this market to do to be able to rally back up to this area. But for me, I'll talk about that when we look on the lower time frames here. But yes, I am slightly more skeptical. Before today, okay, I would say that it kind of favoured maybe towards the upside a little. But due to today, I'm kind of favouring lower prices. So that's kind of thrown a spanner in the works, today's news, if it were.
Yeah. By the way, just FYI, and for those of you who have not heard the news, like what was the news today? The CPI at 9%, which is again going up. So again, an unexpected number. By the way, the last time when we had the CPI numbers come in and they were unexpected was right here. So it kind of makes a lot of sense that we're gonna have some kind of pressure today for the with the CPI report. Now, last time it just basically took us down because, as I said, this was a slight mini black swan event because everybody was expecting that inflation is kind of topping, and CPI is topping as well, but instead we're still going up. But going up going up in the CPI and going down in the market here is different than what we're doing right here. So that's just like one
Yes.
observation to the same type of news.
Yeah, that's an important characteristic to observe.
Yeah. And then, I mean, like, I'm not going to go through the analysis here because William has done a wonderful job here. I'm just going to say, like, from this button on, everything is bearish. So this was our call on January 5th. We're still in the bear market.
Yep.
So there are quite a few like people, sometimes students who, when we're discussing like, oh, there is an attempt to rally, oh, they're bullish. Do not confuse our understanding of how the structure might be unfolding, like in some kind of rallying mode, just because we are in the oversold condition, to the overall definition of the market. The market is still in the bear market territory. There is no denying that. And I mean, we've been talking about this since January, since the beginning of January, that we are in the bear market. Now, as William has said here multiple times, so again, not going to go deeply into this, shortening of the thrust relative to, let's say, this thrust to the downside.
Mm-hmm.
And then the conditions where demand is coming in, but it's interesting, like demand could be coming in on the way down. So that's the first condition, on the way down. And they are buying, usually this is the CO type of buying, more like contrarian buying. And then what I call a momentum demand. And this demand is usually, trend followers. And we studied this in WTC1 course. So for those of you who are not familiar with these definitions, you guys are welcome to attend those classes. I'll be happy to explain this to you. So what I'm not seeing here is trend followers. It's almost like, yeah, there is some value, oversold condition. There is some value associated with this. They are coming in, they're buying here, they're buying here, they're buying here, they're buying here, they're buying here. All of these bars is hidden buying. That
Yes. Agreed.
does two things. That stops the price from moving further down in the oversold condition, and that creates the condition where supply is exhausted for the rally to come. Now, William has mentioned, look at the volume signature on both of the rallies. They're actually going down. And one of the things here was the rally itself. Let's just say like we had maybe the same condition somewhere here around this area, like around these three bars. Buying, buying, buying. This is actually a very interesting bar. Let's keep this in mind for our discussion of oil today. I wonder if we could kind of like find this type of analog with oil. And then look at the first rally out of that place. What do? We do like 10% here. Okay, so what do we do here? We do slightly less, 8.36. So even though the character of the rallies are somewhat the same, right? So we're rallying from the same demand. Demand comes in as the price goes down. So demand is buying supply, absorbing supply as the price goes down here, and that produces in the oversold condition this rally. So we've talked about this before this rally has happened.
Mm-hmm.
But the demand is also diminishing here. Here the same. Demand is coming in as the price goes down, produces stop in action, and then as the price rallies, demand is diminishing. Ooh, same type of character, yet different type of results. So this definitely shows us how demand is a little bit weaker than, let's say, in the previous position. Having said this, I think the whole puzzle here is the condition where we have both supply and demand diminishing, and that's why it's so confusing. Usually when the volume goes down from the, let's say, some kind of stop in action, in this case it could be an intermediate stop in action, You could also be thinking like maybe this is also an attempt to stop here as well. This is a completely different discussion. But when the volume goes down, both supply and demand is going down. So the question becomes for us chart readers is like, how in the world are we going to interpret this? This is like the most difficult space here, spot here with the supply and demand going down. Somebody is saying like, okay, we're in the apex formation. Apexes are notoriously hard, for the bias definition. I'd say this, I mean, like, and I think that I'm going to echo William here, or I'm just going to develop a little bit an idea here. Whenever this happens, I always look at only one thing: result. What is the result? What is the current result? And what is the overall result? The current result is that we're still kind of like making higher lows. We're making lower highs as well. But we're in the middle of the structure. We are not necessarily like at the bottom. We're not necessarily at the high of the structure. We are testing. We're just still kind of like in the testing mode. And as we're testing in this mode, and we might be thinking, okay, what if we are in some kind of trading range right here? There are two resolutions to this trading range. Either we're going to go up right away, and for that, today is going to be extremely important. As William have said,
Yeah.
we got to look at the close. Like with all of this news coming in, would we close more positively or more bearishly, right? So if we close, and these three bars are extremely important. 1, 2, 3. Why? Because demand is coming in here, absorbing supply. Then supply is trying to still go down, no result. And then again, demand is coming in and pushes us up. So where are we going to be closing relative to the tails of those three bars? That's the biggest question.
It's a very good question. And those three bars here, Roman, they are somewhat of an anomaly. This doesn't really happen that often, I would say. But you are correct here, because we've already visited this area, and at the moment, what's happened? It's found some buying. So again, this is the Wednesday's a new Monday, Roman. We need the close.
Yeah, I know, yeah. Yeah, it's kind of like an internal joke, guys, that we have, that, it's really hard when we have Monday class in the morning. There is still discounting happening over the weekend. And then, like you have the initial push in the opposite direction. So it's really hard to make any type of, calls there. But I would say, William, like, looking at this three bars, the tails there, today's close, I would be just thinking like, oh, give me the best bullish close is probably going to be at least on par with this close right here or above it.
I agree.
Just if you give me that, then I probably would be more inclined to think like, yes, okay, at least an attempt to continue, at least an attempt to continue. Could we overcome this downslope and resistance? If it's going to be closing like this or this or this, or even worse, lower than this level, then most definitely we're going to be revisiting the support.
We got white space from here to here.
Yeah,
so that
and then I would be thinking like we are in the trading range right here, and we would be like thinking like, okay, potential phase A, and now we are in potential phase B, something like that.
But I think it's a good observation, though. A good point. What I'd be taking away from here is we've come into this area of these demand towns, and we've actually found some buying. We have found some buying off the lows. But what will happen thereafter? Because we do know it should produce a high volume bar here. So there's going to be well, we know there's going to be a lot of there has been a lot of movement.
It's probably going to be the fourth highest volume signature since the selling climax. Just because this did not have a lot of catalyst behind it, but this is, so it's probably going to be, well, or maybe on the same level, like the fourth or the fifth highest volume signature. I also, like, on a very, very simplistic level of how we would be interpreting this, demand has come in right here, so the buyers have to protect this area. So, there's three bars with the demand built in it. If the buyers really are expecting a rally here, then for sure we need a better close. For sure we need an increase in the volume signature, and for sure we cannot go lower than this. By the way, another interesting point that you're making here is that this was an anomaly.
It is.
Could you discuss this a little bit with us here? Because I'm going to give you a couple of analogs here. So let's just put analog number 1, analog number 2, and then analog number 3. Could you
So
discuss all three?
yeah, well, first of all, what is this action? We got to label it as testing. It's
Mhm.
testing down into this area. And I would say this bar here, some kind of stopping action. Usually, I would say that, I mean, odds would favor, if I see this on the intraday environment, I'm looking for continuation to the upside. But it doesn't. It comes down to the lows again, tests deeper, then closes above this bar, kind of engulfs it on lower volume. And that's interesting. Okay, it did some testing, and I would say due to the volume and the close, yes, there was supply, but buyers are willing to absorb it at that level. And there was absorbing here, and now they're absorbing here. And then finally, the third bar, I'd expect continuation from the second bar. Didn't happen. We dipped down all the way again. And then with even higher volume, then the buyers come in and we close above these two bars. And this is testing action, but I'd say the resolution of all three bars are bullish. You know, stopping action, slight ease of movement, and then the last bar here, the highest close, the largest tail. We're kind of ready for, you know, a move higher. But the move we get, Roman, is kind of limited. Look, it just dwindles off. You know, we don't even get to test the highs. So these kind of three bars in this manner, A, tells us there's supply in the market, but B, buyers are really trying to absorb that supply. Yet at the same time, when they do absorb that supply, this is the kind of rally that we receive, which tells me, okay, perhaps the buyers are exhausted. Now the sellers have a time to come into the market, and we're not met with great selling here, to be honest. But I like what you're going here. Shall I let you do the comparison between the
Yeah,
testing?
especially on the first selling climax.
Yeah,
because they look somewhat the same.
Okay, I'll let you do the comparison here. So
Oh,
for me,
you want me to do the comparison? Okay, I thought you
well,
were
well,
going
well, I mean, well, for me, those three bars,
to.
it's unusual to see all this testing bar, as I say, be so they're not uber bullish, but they're all highlight. Like when I like testing bars, because we're coming down for the market to test, I like the market to disconfirm supply. Okay, which means we have a very narrow spread with low volume. Here we're seeing market activity dip down, dip down, dip down. It's kind of absorbing supply, which is different. You know, okay, I'll let you take the reins in here. So for me, those three bars, they they offer me a kind of an insight into the buyers are really trying to hold the market there. You know, but because we're not, but there's an inability, there's still supply basically, and buyers are coming in. We don't disconfirm supply from narrow spreads with low volume, and you don't
Okay.
usually have these kind of three bars unfold in that manner. That's kind of.
I'll give you a couple of pointers here that I see. First of all, if we would be comparing, let's say, let's forget about analog number 2. So 1 and 3, the comparisons here. Look at this volume signature and look at this volume signature. So slightly different. I mean, there was more consistency of the supply in the first case than in the second case. So that's just like one observation. We could also, like make other observations, like where it happens relative to the stopping action itself. So there is a disconnect a little bit here relative to the test. The test at the first in the first analog is much more localized than in the third case.
Yep.
The second observation here is what comes out of it, right? So a heavy presence of the supply on the test suggests the rally, and the rally happens in both cases. But it also suggests that because of this presence of the supply, this rally is not going to be that great. And I would say that this rally was somewhat decent, relative to the change of behavior that we have had. I mean, we've retraced one half of the way.
Yeah.
This one, yeah, this one is retracing what? I mean, we're retracing basically this. It's actually slightly even better, but it's definitely worse in terms of the actual distance that it traveled. So those are the only two observations that I have. But it was kind of like William always mentions that this is more of the aberration, that these three bars are forming. So therefore
But,
that
but,
question.
but by the way, this is also complex testing. This
Hmm.
is unusual testing.
As this one as well. I
And
mean,
this
like,
is unusual testing. Yeah.
relative to the sprint. And I'd say,
Yeah.
like, like, to me, this actually also a little bit more advanced here, but this is a test to this. It's a
Yep.
lower low test, which is
Mhm.
unusual definition because we usually would like to have higher low tests on diminishing supply. This is slightly different. But one thought that came to me, William, here in terms of the testing, right? So we like test here, test here, test here, test here now. All of the tests are complex, and I think the complexity is the reflection of the presence of the supply, the presence of
I
selling.
was took the
The
words out of my mouth. That was going
yeah,
to be
the
my next statement.
yeah, the
There's that
presence of
present
the bearish
supply.
sentiment.
That's all that complexity means. It
Yeah.
means there's supply to
Hmm.
absorb.
Yeah,
Wow.
and actually, I mean, like, obviously, as the market unfolds and we get more information, our views are changing. I mean, like, I would say, like, uh, I was all the way just bearish, 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 bearish. Here we started to be bullish short term. Here we started to be bullish short term. Even here we started to be bullish short term. But this complexity of testing, the presence of the supply, is basically suggesting even if you're gonna have the rally, you gotta be careful. You can't think probably like as we were thinking like, oh, maybe like 1959 analog. Could we go to the higher highs? Maybe questionable here. Could we go to the higher targets here? Maybe questionable here. So I think that the realistic targets for us just to consider is just like, target one, zone number one. Could we
Hmm.
get here? Could we overcome this level right here? And if we can't, and if we are just in the trading range, oh boy, I mean, like, this is just a continuation out of the redistributional structure.
Yeah. I mean, slightly different this time around though, because we are getting, with lows testing, we're getting nice space. We don't really get that. We come down here, we test. We come down, we get immediate
Yeah.
testing. Oh, I mean, you could argue this is testing this, but I think this is different structurally. I'd be labeling these different.
Hmm.
So,
Yeah,
so if
one thing that let me just add to
yeah,
this. One thing to this thought. One thing about the differences in the testing structure is this. Like,
yeah,
retracement of the test. We have so much space here. We don't have it here. Like, retracement of 85%, retracement of like maybe like 80, 70%. These are deeper tests than this. And again, this is kind of like that confusion. You have the supply, which is still present. They're still selling, but at the same time, they're already buying. And they are buying the value. And even in the growth sector, I mean, like, we kept saying to you guys, especially in WMD classes, for a whole month, that the growth will start outperforming the value. Like, we're seeing how the tech stocks and the growth stocks are being picked up. Why are they being picked up? Because of the value, because they dropped so much, 60, 50, 70%, 80% in some cases. And there is some, pickup in value right there.
hmm
Okay, William, why don't we go to other charts as well?
Can we,
Just
sorry, before we do that, can we quickly look at, say, the 5-minute time frame on the
absolutely,
on the
yes.
S&P, on the ES?
Mhm.
Because this is somewhat of an anomaly. And when we briefly met before here to
You want
discuss the
just today's
class,
session?
yeah, how for those who don't know, I'm an intraday specialist, and how I would attack this day is the highs, the lows. Okay, I'm not looking to trade anything in between this. What exactly does this mean at the moment, Roman? I mean, it is supply. We can see selling coming in, but where's
Mhm.
the downside continuation? Look,
There is none.
we find some buying, we test very low volume. Look, we have a hidden spring here. We come up, no supply. Look at the volume coming into the upside. We
And
react.
these are the two most important bars for me
Yeah,
right here. Right
they
after
are indeed.
this, I mean, obviously this is the most important bar for the
Hmm.
day, but these are the two most important bars after that because
It eclipses
aberration, right?
this volume. Yeah, again, eclipses the
Mhm.
volume of this. If you amalgamate these two bars, I mean, look at the volume. This is this
Mhm.
is this is unbelievable. So demand comes into the market, we react, volume declines, we push on up. Look how we're pushing up. Breakout bar, volumes increase. In fact, here, I'm just looking at this. The volume signature is kind of textbook in a way. Demand's coming in, supply is
Mhm.
reducing. Demand's breaking through to the upside, supply is reducing. Demand is increasing to the upside. We try to react here, reducing. Now, this is the first time we're kind of rallying, where volume is sustained and not very high. And we can see from the spreads, they've narrowed, volume's reduced. So this selling is actually better than this buying at present. So I mean, so here we go. We have an intermediate high here. This market has to overcome. But the way it's unfolding at the moment with the lack of follow through to the downside and all this volume signature and the way we're breaking out, it looks bullish,
Yeah,
ironically.
intraday it looks bullish, and
Yeah.
I would say that again, this was like a true reversal in
Oh,
a
yeah.
sense of the effort and the result. And look at the test, like the first test that we're seeing. So let's say T3, so goes pretty deep
Very deep.
into this whole rally. Look at the second rally that we have. Is there a buying there on this rally? Yeah, for sure. I mean, like, and it's still increasing into the breakout, which in this case is a good breakout. And
And
then
you get momentum.
there is
Yeah.
some continuation after that,
Mm.
like a low momentum. But I would say, William, that this whole action right here to me is just, a test of its own. And it's in the upper part of this swing, which is great. So now it's not retracing so much, it's
No.
actually kind of flat, which I like more for the bullish picture. But I think that, I mean, the key for us is going to be this area right
Yep.
here,
It
where it
is.
all started, like T1, T2 as targets. Could we get here? And more importantly, like, what is going to be the close? Are we going to retrace? Are we going to close here? If we're closing somewhere here in this area, wow, this will look definitely more bullish after this catalyst and the
Wow.
recovery that we have.
Mm. So I mean, these two bars, Roman, these really are an anomaly. I mean, look at the
Hmm.
buying
Yeah.
coming into this market. And then the continuation with the increase in volume. I like this. This is good quality buying. Why do I say that? Well, because we're breaking into new highs. We're tracing very deep. And look at the volume. Yes, it's increasing, but we do so on kind of good volume, lower volume, which tells us less selling friction. It's being absorbed. And we can see that volume has reduced dramatically here. But look here, intraday environment. Where's the volume gone to the upside? If we're gonna this for me is very important. This level right
Hmm.
now. I'm
Hmm.
intrigued
Yeah.
to see how this unfolds.
I would say that probably this bar right now, like as an of intermediate importance,
Yes,
right
I
here.
agree.
Could we stay above here? We could consolidate here. We could, have more testing, but would we go up or would we just like, start failing down? And
Hmm.
if this leads more obviously to the bearish, I mean, like I'm stating very obvious things, this is going to be more bullish, but just looking at the daily chart and then comparing it to what the intraday is showing to us, that's probably the path.
Hmm.
Okay, great. Let's look at all of the indices now. And William, what would you favor as like, the strongest out of the four?
Uh, let's have a look. What would
Nasdaq,
I? Yeah, well, on the
Russell?
in the immediate,
Hmm.
what's just making high? Yeah, I'd say the Nasdaq actually. I'm just
Why
looking
don't we look at the Nasdaq, you
looking
know,
at the highs. This is
mhm.
approaching a high. Yeah, the Nasdaq.
I mean, look at this structure. I would argue that the feel here is slightly different. you know, the way how it's bottoming
We
here,
round. I'm
right?
just going to say the way we round under here.
Yeah,
Yeah,
yeah.
sure.
It's not as aggressive as an S&P. And S&P obviously is weaker, so it creates a slightly different structure. I mean, is there any difference here when you look at NASDAQ and, you know, like away from S&P? Would you say that this looks more bullish to you?
I would say it does look more bullish. I like the way that we hold here. The continue. I mean, look at the consistent volume here. I still don't like the way it doesn't test the highs, but you know, that's
But
okay.
it's much closer than on
It
the
is much
S&P.
closer, yeah. And I like this kind of stopping action here, like popping volume. Spread reduces, shows there's some kind of buying here. This bar as well. Look, it really isn't as close to the lows as it was in the S&Ps. Again, though, look, I think the volume here will certainly eclipse all of
Yeah.
this.
And
This is
look
going to be
where
quite
it
high.
comes. Look at where it tests. I mean, we've tested this before, right? So all of this, so it becomes a resistance.
Looks like
Test
some form
again,
of
test again.
anti-spine, So buying's emerging exactly where it should, once again.
Again, I mean, S&P maybe is not the best look there just because it's weaker. And I mean, like throughout the whole structure, what do we see with the volume signature? Still going down. I would say like there is some consistency of buying right here. Look at how many green buying days we have during this
Yeah.
period of time. I mean, like I would say that this is definitely, I mean, it's not that visible, but in itself, we could consider this a change of behavior just because of that consistency of the demand that's coming in and producing all of those buying days.
Some kind of absorption, because when I'm looking at this, we from the lows to the highs, we net X amount of points out on declining volume. Now we get consistent volume from here to here, and we don't net as much to the upside, yet there's still, there's active buying here. We can see for a whole week, yet we don't push it up, which tells me there's still supply, but it's trying to absorb. Okay, so I'd say that this rally here is kind of some form of absorption, which makes sense actually, Rome, because over here this kind of feels a little bit climactic. So we get the vacuum within the market, then it reacts, it tests into here. Now we're just seeing a little bit of struggle.
But I would say also, like, look at these trend lines, right? So this is very much respected. And look at how oversold condition is just like less pronounced than in the S&P here, with this localized stop in action. And we're so close to what? To like the intermediate min here for this whole channel. So this is the moment of truth. This is the inflection point. I mean, we had one here, and there was an expectation of like, could we break through? We did not. The breakthrough did not happen on the CPI news, which is ironic. Here we do have the same CPI news. Could we go down? Could we go to the support level? Well, what if we hold here? And again, it just all depends on the close. Like there is definitely this misunderstanding, William, that you and I will both encounter with students and with people who we talk to, and that is like people keep asking me in this area. Once we went into testing, they're like, "Okay, well, could you update me more on what's going on?" And I'm like, "There's nothing's going on. There is just testing's going on." And there are only two ways how it's going to resolve itself, maybe three. One is the confirmation of their original thought, which is like we have a rally within the bear market. Second, a failure of that, and we go, let's say, at the minimum to the support, and we might create even like a lower low there. And the third idea is like we are in the trading range, and just wait, and see what's going to happen. Like, why guess? Why try predicting what's going to happen? But I think it's kind of like this nervousness of the public sentiment as to like, I want to know now because like, I have to. I just don't have this anymore. Like to me, it's
No,
just like chill, like really chill and just like enjoy your life. And then whatever the market is going to do, you just follow, right?
I mean, I'd say this market is a little bit unclear, and I certainly wouldn't be taking a position here. But I can
Or
guarantee
at
you one
least
thing.
an oversized position. You could take probe's position,
Of course, of
probe in
course.
positions where you could just say like, okay, I see that, let's say like I've been buying here, I've been buying here as well.
Oh,
So a lot of my positions here, which are probe positions, are actually behaving really well, especially in the growth. And they're like, already like plus 30%. And then, of course, it's much more difficult when you, let's say, somewhere here and your emotional self is now saying, like, now's the time because now I see enough bullishness. And I am also fearful that I'm going to miss out on a much bigger move. So what do people do? They open positions here, right? Which is ultimately late for this type of, if you're thinking a bear market rally, I mean, historically, those are going to be between, let's say, like 10 to 25%. So if you've already invested at, let's say, +8, you already taken almost one half away from the profitability from this potential rally.
hmm
If in the bear market, if you are playing the rallies, you have to buy at the bottoms and
yep.
have the guts and boldness and bravery to do that, and
So
also
the signs are
technical
there.
skill to see that.
You can read the climatic action and the stopping
Yeah,
action,
but
etc.
I mean, like,
But
my argument here, William, is that this is the worst place to get
yeah,
long because you already halfway into the potential rally right here. So
hmm
tactically, it doesn't make sense.
well, I completely concur.
Okay, why don't we go somewhere else? 950. Okay, let's go to, and we have 4 other markets to discuss. Let's go to gold first. I'm just gonna prefix our discussion here that, first of all, just to review our call here, we were saying that, first of all, we are in the downtrend.
hmm
That's number one. Secondly, like somewhere here, we said that we're gonna attempt to rally at least to the resistance. We did. Once we touched the resistance, supply came in, we said this inability of this up bar to overcome the resistance is bearish and should be followed by a bearish price action, which
hmm
happened on the next bar, and then which happened into the lower high. Then we have the drift here, or a bearish feather, which suggests increase of the momentum on the breakdown of this level with the increased downward spread. Everything happened the same way. By the way, I think we did say that there might be an opportunity here for a really good intraday or short-term swing trade on the
hmm
increased supply, and that happened. And then we said that the way how the aggression happens here, we need to come to some kind of oversold condition. We're here, and we most likely are going to be retesting these lows right here, and we're
Yep.
right in this target zone. So that
hmm
was the analysis before. Now that we're here, William, I mean, like, there might be an argument of like, yeah, there might be some kind of continuation there. What are your thoughts on gold? Should we continue still to the downside? Are we finding some kind of support here?
I
What's
mean,
your take?
technically, we're springing. Can't I? Technically, we are
Mhm.
certainly springing this. Well, I can't draw with a mouse. Technically, we're springing, and then you'd have to ask yourself everything, all this wonderful analysis, and this area over here I found so intriguing. Every up bar increases, but then every down bar increases, engulfing the previous up bar. It's like checked every time, and this is a signal
Mhm.
now. This kind of action
Let me
over here.
increase the size here. Just, this is
I
such a
really like
great
this.
point. Yeah,
This is
this is such a great
such
point. So are we talking about like 1, 2,
so
1, 2, 1,
beautiful.
2,
hmm
1, 2, something like this?
Yeah, just wonderful price action. If you can read
Hmm.
that, I mean, every time we try, so the buying's trying to, so this is a breakout. This tries to break out. This tries to break out. Every time it's engulfed. It's engulfed. It's engulfed, with the selling actually increasing every
William,
time.
this is fantastic. This is such a great material right here, guys. I mean, like, and such an analogous price action. And I would say
Yeah.
like this one right here, 1 and 2, this bar, even though like or maybe it doesn't enclose, the previous bar number one. But look at the the action that comes after that.
Yep.
That bearish feather, and this drift of the price to the downside on diminishing volume signature. We again study this type of patterns, in WTC1. And it just the same. The two is just prolonged. It's just like the same price action as a single bar tool, but it's just like prolonged in so many bars here.
It's just it's just a lovely, lovely little price action here. The market is telling us on this one here, we're going lower. I mean, this isn't nice price action. Do you want to explain this feather in here, Roman?
Well, I mean, you have to look at the background. And the background, your long-term background is to the downside. Your short-term background just came out of the sign of weakness. So there is a weakness here around this. This is the place where finally, like if here we still have like emergence of the supply, here we don't have emergence of the supply, but increased result to the downside that we're observing from 1 to 2 and then into 3. But 3 is pretty kind of like showing us that with the long-term background to the downside, we're developing also a short-term background confirmation that we're going to continue. And then what happens after that? Lower high, and then after that, whoever wanted to sell, they sold.
Yeah.
Whoever wanted.
Yeah, so this up bar with this volume is that's an aberration. This shouldn't be occurring.
Yeah.
And then preceded by this, wow.
And
the
I mean,
market's
like
shouting at you, lower prices.
I think the key to the volume signature, because there is a lot of questions that I'm being asked about like this price action. Why is the volume signature so low? Why are we drifting, as you say, like, into the support? Well, you have to think about what has happened prior to this. And these two bars are really great representation of up bar, buyers bought, down bar, sellers sold. So what happens after this? A period of inactivity where everybody did have done what they need to do.
Yeah.
And then they just go away. And with that, the volume signature goes down. But the key, again, to me, in this type of the scenarios, and we've just discussed the apex in the S&P. What did I say, guys? When we said that both supply and demand are going down, what is the most important thing? It's the result. So you look at the result. What is the result? A sign of weakness, a lower high. Structurally, that's bearish. And then the price comes to the support, still bearish. So then that's basically your bearish feather or your drift. And then your expectation is that supply is going to increase and momentum is going to increase just because of the background. I thought that was actually, pretty easy to interpret, in terms of the continuation to the downside. But what is your view now, just like in general view on gold?
So in general, so let's talk about, everyone should be familiar what a spring is, and this certainly is a spring. And then we have to look at the market and ask yourself, would you trade this spring? And then you have to look at the advance to this structural area and look at the volume increasing. I mean, that's that supply coming in, breaking structural areas. Yes, we do come down to here. Now, it is a little bit interesting because we have encountered buying at the first structural support level. So this is our buying zone, in here. I mean, this is a little bit large, but this is our first level support, and we have encountered some buying. Now, would I trade this spring, Roman? I couldn't trade this spring. Purely because of the back. I mean, look at this. Look at this approach. I mean, there's volumes increasing here to downside. We're breaking structural areas. We found an area where we should find some buying. Yeah, and we have found some buying, but this would be a low odds spring in a confirmed downtrend, which ends, climactic. And then we have all of this actions, and we're breaking structural areas. All I see here is negativity from here. Yes, we have found some buying. We may rally, but I mean, unlikely we get to this area, I'd say. It's possible, of course, but I would be expecting a test into here or deep into this bar over here, Roman.
Yeah, I think
So
we
this,
should see lower prices
yeah,
with the maybe like temporary stop in,
yeah. I mean,
attempt
we
to.
could get a rally of
Mhm,
sorts, but that will be a low odds spring. I wouldn't be looking
mhm.
to
Yeah.
potentially trade that.
Yeah, and I wouldn't trade this sprint either, even though, I'm much
We can
crazier
sit.
than you in trading. You know that. So like sometimes I would go and, catch those, fallen knives. But I don't see anything here, not in terms of like, oh, is it gonna attempt to rally? Yeah, it shows
It
some
may do.
demand. This is in itself already an attempt to rally of the support level, but what's the potential here?
Yeah, exactly. It's
And
kind of
this is the
limited,
key.
40 points, and having that against you, it's kind of just a low odds spring.
Mhm.
This kind of action approaching a support level is the exact opposite of what I want to see, considering
Mhm.
right from here everything's climactic. Everything sorry, is of weakness. So no, certainly
William,
not.
another point here. Let's discuss the character because when we look at this initial change of behavior that leads, to the
Hmm.
transition from the uptrend to the downtrend,
Yep.
then we look at the continuation and we said, yeah, there is a swing trade here. Maybe it's not kind of like as good in terms of the character, but still it was available. This is definitely a really great,
Yep.
change in the character where we see not only expansion of the effort, we also see the expansion of the character in the result, right? So in the downward spread, these are one of the best spreads, at least this one right here, that we have had since this
Hmm.
bar right here. So this well, first of all, just like, character diminishes slightly, character expands slightly. So this tells me that this is not done yet. So I started thinking like, what does this structure reminds me of? Uh,
There's no signs of slowing up as of yet.
yeah, yeah. So something like this, 1, 2, and look at this double top right here. Look at this kind of like there are some elements of the reaccumulation right here, especially here. I would say like right here. These are the elements of the reaccumulation that led to this successful trade. By the way, this was done almost live. We've profiled this trade,
Hmm.
so this was really good. So number 4, where would it go? Would it stop here or would it go into the lower low? Let me just bring up another chart and kind of keep this structure in mind, guys.
Oh, you got an analog. Fantastic.
Well, a little bit.
Is it your bit? Is it the beast? Is
And
the
the
bit?
best, that's the best, yes.
I know,
How
yeah.
about this, William? 1, 2, 3, and then 4. So, and 4 is definitely a lower low.
Yep.
And kind of like this double top, and then we're the character. Like the reason why I remembered this is because when we were discussing the BIS, you were talking about look at the character here, look at the character here.
Yep.
That's pretty aggressive, and this is what I'm seeing in gold right now. It's just like this aggression of the character into the support is increasing, and it suggests to me that maybe we're gonna have a lower low here in gold, and maybe we might potentially have some kind of continuation there.
Hmm.
What are your thoughts on this?
Yeah. Yeah. I can see that. I can certainly see that. So, could you make an argument that these are kind of correlated then, gold and Bitcoin? In
Yeah,
a way.
of course.
I
Yeah,
guess they
yeah.
are
There's some
correlated.
correlation there.
Yeah.
Yeah.
But yeah. But here, I mean, arguably, you can see that the actually selling's increasing, and it's not climactic either. That's a nice rally. That's a nice move down. That's a nice move
Mhm.
down. That's breaking structure. This is breaking structure. Volume's increasing. Nothing untoward here thus far. I mean, Bitcoin isn't looking good, Roman. Uh,
Yeah.
I mean, I don't know
But
how this
just to
can go low.
finish, yeah,
This
just
can
to
go
finish
very
with the
low.
gold. I mean,
Yes.
look at this stop in action. Look at this stop in action, and look at the trading ranges that come after that. Right. So, is there an attempt to rally there? Yes.
Hmm.
But is it worth our time? Trading it. Maybe on the intraday, but not on the swing time frame, I
No.
would say. So that's kind of like the last thought that I have about the
Yeah,
gold.
no, that's a good observation. Like you want to stack the odds in your favor when you're. I mean, if you're looking for bullish setups, which is a spring, just look at the approach to the structural area. Do you see supply? Yes, major way breaking structure. Yeah, example, et cetera, et cetera. So
Mhm,
yeah,
mhm.
I mean,
Okay.
complete opposite of what we want to see.
William, what do you think about the beast? What's
As
your
you know,
take?
I'm not fond of the beast. I've only traded it a handful of times. It's too much of
Hold
an
on a
enigma
second.
for me.
I'm asking
I
about
like
the technical
I like an
pictures
easy
here.
life. I like to trade simply. It's, it, let's have a look.
Well, just tell us what you see on the technical picture, because and let me kind of like make some kind of preludes here. We've talked about the character of this decline.
Trust.
We've talked about the character of this decline. We are in the target zone of the long-term support.
Mhm.
And do we have some kind of climactic stop in action? Yes, we do. These are all climaxes, by the way. Selling climax, selling climax, selling climax, selling climax. The difference between those climactic actions is that majority of them are intermediate selling climaxes, intermediate selling climaxes. And then this is the question, and this is the question that I keep asking on Twitter, for the whole community. Do you think that this is the low for the Bitcoin? I think that's a very interesting question. And then the second interesting question for me, William, here is just more of like, well, what is happening here on a short-term basis? The volume signature is going down. Again, we're kind of like in this, inactivity type of mode. And yet, what is the result that you're seeing here?
Me, I'm not seeing. I mean, we're still making progress to the downside, and selling's actually increasing in quality, if anything, in terms of ease of movement to the downside. Look how many bars it takes to come down here with this volume. How many bars does it take to come down here? Although increasing, it's much lower than it was over there. And this originates from an upthrust, which is a bearish kind of,
Let me clean this up a little bit. Okay.
which is
Mm-hmm.
of bearish quality. What I don't like about this, which is an important observation, is this is huge structure demand zone. I take it for Bitcoin.
Mm-hmm.
Yeah. Why are we not finding any kind of buying like straight away?
Mm-hmm.
Even if this is climactic, we should have some kind of AR automatic rally of sorts. But the market is so weak. I think there's just so much uncertainty. That's what it is. I mean, yeah, look at this decline to the lows and look at this rally. It's minimal at best. I just don't see anything favorable here
Mm-hmm.
uh, from Bitcoin. Like there's just why not even have a rally off this huge support area? It, everything's just weak to me. Is it possible it could be the low? Of course it's possible, but I think we're going lower. I think we're going quite a bit lower, to be honest.
Mm-hmm. But are we going lower now, or are we going lower after the rally?
Let's have a look. Well, we've got an upthrust. We're here. Well, kind of. Again, we're in a trading range at the moment, which we've been in for a month or so now. The selling quality is increased in terms of ease of movement to the downside, but we're attempting to hold here. So your argument is, do you think we'll have a rally before we go lower? What up to?
My argument is that we're testing and let's just kind of see, like with the market itself. Like I don't necessarily. I mean, I have some positions, some probe positions in the cryptos. I have a probe position in Bitcoin. I have a probe position in some other coins that like are much more attractive than Bitcoin. So I mean, like I'm just waiting.
Yeah,
There's nothing
I mean,
else to
I
do.
think that's it. I mean, here, look at the volume. This kind of climatic action. We're in a trading range. We see that volume is certainly reducing to the downside. Okay, but why? But this is suggestive of ease of movement. Why aren't we buying? Why are we coming down in 3 bars as opposed to 7 bars over here? Question mark. I would just let the market unfold. It's not. It's, as you know, I'm not fond of Bitcoin,
Yeah.
but
hmm
I still
But
think
it's
lower.
interesting. It's interesting how the sentiment is so bearish. I mean, like I'm kind of
Yeah.
tracking it through Twitter. So like somewhere here, 72% of our poll respondents said that we're in the bearish market here. Just recently, right here, and I usually try to do this like at the highs where there's like a more bullish type of sentiment. And it was so interesting. Actually, 76% said that we are bearish here. So it doesn't really matter whether the rally happens and whether I'm trying to kind of like position the pole around the high of the rally and just to see is there a change in the bull like Poland. And no, in fact, it just increases even more. So pretty interesting.
Yeah.
Okay, let's do, what do we do next? Ooh, let's go to the 10-year and then we'll go to oil. Okay, so the 10-year we've talked about from the short-term perspective, from the long-term perspective. I think that on the long-term, maybe we should start kind of like on the long-term perspective and just see where we are. So this is the whole history, since the high in the 1981. I would say that to me, this is the trading range that I'm looking at currently. Did we overcome this and then this resistance right here and this resistance?
So we've up thrust first resistance level.
Yeah, we're up thrust at that level. I mean, like if we're thinking this is the structure, I mean, like this is kind of like a very common look at the structure. Is this phase C? Roman, what do you think about the causality going into 2008? Could we have, like, if we calculate the course, could we go to maybe like somewhere at this level or somewhere at this level or somewhere at this level? If we're gonna go, I would say anything close to this. So just for those of you who are thinking like, oh, we're gonna go to 10%. Could we do that? Yes, there is an extremely low probability of that, that we could go that high. So I would be thinking that something extreme should be happening there. Something akin to like, okay, the war in Ukraine becomes a World War III, a true World War III, and then more countries are getting involved and it kind of like becomes a big affair. So then inflation could maybe like run up that high. So probably a low probability case. I think my view here is that we are consolidating here, and we said that we're going to consolidate at this point, at this resistance. Maybe another attempt to go up, maybe some kind of up thrust, but that's kind of like the maximum that what I think it could be. And then as we go into the recession, coming back into the trading range, and we are still in kind of like a much larger structure, like of this type of sort. So I'm seeing that inflation is gonna, top at some point. The rising of the rates are gonna top at some point, and therefore the 10-year yield also will top. So it's really hard for me, William, to imagine that it's gonna go to like 10% or even like 9, 8, even 7 seems to be too much.
Yeah, where did I say? Around here, around this logic. I mean, I see that the buying has increased on the rallies. It's come to first resistance, we have an up thrust. That's fine. This is definitely the best buying that we've seen, probably. Well, I like the way that it's increasing. This is a little bit parabolic, and then we get to resistance and we have an up thrust. Now I just need to see kind of selling that occurs from this up thrust. If we hold tight, absorb, then we're going high, and then we're going to get to 5 pretty quick if that does occur.
Well, I mean, it makes sense that, I mean, like they will most likely increase the interest, the Fed rate by 75 basis points at the next meeting.
And then another one, and then another
one. Yes, could be, but I mean, like we're already feeling the recessionary pressures. So at some point, I think into fall, they're gonna stop or they're gonna significantly slow down, and that's gonna, start showing us the tipping point of the high. But we're saying like, okay, well, if we are short-term consolidating here, then what do we have here? And we said this looks climactic in terms of the spread, in terms of the gaps, in terms of the volume signature. Therefore, this could be a preliminary supply. We had the case studies where we studied this bar against this bar, And the conclusion here was that we're going to have a much better and much more pronounced change of behavior. 1, 2, 3, 1, 2, 3, and you kind of see how this is more bullish, this is more bearish. So this was the suggestion, and we said like this is going to be the support, this is going to be the resistance, this is going to be the midpoint right here. And look how nicely everything is materializing. So I would say like we're in the trading range.
Good buying here, though. Best buying we've seen. Definitely some good buying. I don't know. As you know, I think we're in a lot of trouble, and I think we're going higher. But time will tell. Time will tell.
I would say probably consolidating here a little bit, deviating up and down.
So that absorption on the weekly time frame is that consolidation at that resistance level where we're currently up thrusting. As long as there's no follow through to the downside when we hold up there, it'd be interesting to see how, because we're met with good buying. Well, we just need to analyze. We've got a lot of time to unfold on the weekly time frame.
By the way, quickly look at the markets pulling up. So again, this is the key level for us, right? So this bar right here. I like how NASDAQ volume signature is going to be high here with this tail. And if it intrudes even more into this bar, even more impressive. Could we close higher like this? I would prefer the close to be higher than the open, yesterday's open. Just for more bullish confirmation. Okay,
could you quickly just on the ES go to the 5-minute time frame, please? I just want to see how we approach that potential double top. Have we broken through on that lack of demand? Oh yeah, look. So we do break out.
Coming in, but we're holding.
But not clean like this or this, but still we've broken through. Yeah. Look at this. That's somewhat of an aberration. It's not clean, so that's a clean close. That's a clean close. We get momentum, a little bit of upside here. Kind of struggling straight away, but
I wonder if we go below into a higher low here and then attempt to rally again from here. Something like that.
Yeah. Okay. We're still pressing on higher. Interesting. Very interesting market actually for today.
I'll leave this open for us. Let's go to oil.
Interesting yesterday's bar.
Yeah, you said that you have some trades there for us to look at, so we'll look at your trades right away.
Yes.
And but on the daily chart, just kind of like to set up the analysis here, climactic action into the buying climax, change of behavior bar, change of behavior itself, automatic rally, secondary test, phase A, and we're done. So here's the argument, for the bearish case. Look at where the sell-in comes. The sell-in comes on the way up and then on the way down. It's all going to be associated with the beginning of the war on February 24th. So first impression is like, oh gosh, that's it. Like we are going to be squeezed on the oil prices. The second impression, we don't know. So let me just sell and then go into what? To go into the period of inactivity, which is very, very much, a part of the TP formation, which is of the distributional quality. And that's kind of like what led to the call on oil right here around this area. The call was that we're gonna see $60 by September 1st. And as we go up, we're seeing upthrust. We're seeing another upthrust. This was the most meaningful upthrust because supply is coming in bunches here. We're losing momentum, and then this was the key bar, the point of entry bar, calling for lower prices. Supply is increasing, and we're seeing the first minor sign of weakness, followed by the last point of supply. Then I really like this extension. To me, this is just like one formation right here. So in itself, this is a sign of weakness, and then we can't even come, to this level. So again, weakness here. And then yesterday's bar is confirming all of that weakness, but an elusive concept here. So now let's kind of like increase the size here. What's interesting here, William, is that it didn't break the support. It didn't commit
No,
below the support.
it didn't.
And you and I, we love this type of bars. So give
Kind of
us
like
your
to usually
take.
buy those bars in the intraday environment, don't we?
Yeah. So give us, and then also let's discuss it as an analog. Like, what do we see here?
Yeah.
With
I
all of this
mean, here
analog
we break
bars.
down valid
Mhm.
break over 50% of our spread, closing under our area of structure. Here we break down, not particularly good break here, Roman, but look at the volume associated with that break.
Yeah.
It's definitely,
Mhm.
yeah. I mean, look at the size of the spread. Sometimes you have to, analyze the bar contextually because, but volume is increasing. Importantly, yeah, as you've rightly noted there. But this bar here, I mean, arguably, you could kind of label this bar a little bit like no demand in an area of supply.
Mhm.
Kind of no surprise that we come down. But when we do come down this time, Rowan, first of all, where's the supply gone? It was increasing. This is the lowest volume kind of widespread bar we've had since this high, and we hold this support level.
Yeah.
And to me, it's a bit of an anomaly. Like it is a good move to the downside, but why are we not breaking to why are we not breaking? We,
Mhm.
we we hold here essentially, and then this bar here dips down to reverse and close. This is a very poor attempt to hold, as a matter of fact, as of right now. But still, though, Roman, even though this bar holds this support level, it is kind of the lowest close we have in this area, isn't it? At the
Yes.
support level. I mean,
Mhm.
you can't argue
And
that.
under
So
100.
yeah. So yeah, the psychological level, it's the lowest close we have at support. I mean, if we do get good, you can argue with this volume, it is ease of movement to the downside,
Mhm.
which tells us there isn't a lot of selling friction. And now we're at support, and this is the buying we're met with. Now, arguably, would you say this is good buying? As of yet, I'd say no. So when you kind of think about all of this logically, yes, it doesn't break support, but when you break it down, it kind of still feels heavy here. It still feels weak. We expect to find buying at this level. It's held again. The Wednesday curse. I just need to see kind of what kind of buying will emerge here. But at this moment in time, it isn't great. It isn't great at all.
I would say that even the volume signature is more important than the price action today.
Mhm.
Like, show me more demand coming in here at this point, because if demand is not going to come in, then we're probably just going to deteriorate in terms of the rallies that we're having. I mean, like, look into this rally, look into this rally. There is a deterioration right there. Could we have another deterioration like this? And then we just continue to the downside. So it's going to be important to see what kind of volume signature we're going to have
Mhm.
today. And, like, definitely intrusion into this bar is going to be important. So this
Yeah,
could be just an attempt to rally. But this bar is always kind of catches our attention, and
it
William and I,
certainly does.
we usually
I
kind
mean,
of discuss this.
I
Mhm.
mean, we also got to look about how far look, this rally we traced this far. This rally we traced this far, and we are at support level. I'm expecting the market to hold. I'm expecting a rally of sorts. The question is, how far will we rally into this bar? Because we can see here, top third, top 40%. Now, if we can say top 50, and then we can't start to come down, it's getting weaker. So the rallies, and arguably, you'd have to ask yourself as well, Rowan, this is kind of the major support level. This is where we
Yes,
should find
yes.
the best
hmm
buying. And
hmm
as of yet, not not particularly great.
By the way, Biden is on the trip to Israel and Saudi Arabia. I mean, obviously, there are some things beyond oil that needs to be discussed. And this whole idea about the oil call, going lower in such a bullish sentiment, was pretty ballsy. But the thing about it is that the macros are kind of starting to catch up with the technicals. And there was a period of time when there was nothing that's going on. Like right here, there was nothing that was going on. So there is a question here from Alexander. Could this be a phase C? Like meaning that could this be a potential phase C? I would say that this whole structure, if we divide it into different segments, has probably those three segments to me. Segment number one, which is still bearish, even though it looks like, oh, it's a buy-in climax. But what is the ultimate result? We stop, and then we produce the change of behavior, and then we retrace the whole climactic run that we had. Bullish or bearish? More bearish than bullish. Then the second, phase of it, as I said, the phase of inactivity. So this phase you just eliminate in terms of the bias definition. And then the third phase that starts with this bar, and we're still currently in this phase. What is it? Supply is coming in, supply is increasing, supply is coming in. And what is the result of it? We're going down. We're having lower highs and lower lows. So if we would take phase one and phase three, just because phase two is just inactivity, what is the overall bias? Probably still to the downside. So therefore, just because we're in the proximity of the support, to think that this is phase C is appropriate, because we always create different scenarios for confirmation and no failure. But what is the background, Alexander? And I would say that the background is still more bearish than it is bullish. William, would you concur with me on the bias, on the background
Yeah.
bias?
Oh, yeah. 100%. 100% with you. But I've got a question for you here, Roman.
Sure.
If you're talking of causality, where would you be drawing your causality from?
Now, see, and I'm going to go against the conventional thought,
Okay.
because the conventional thought is going to be like, is going to be just to go all the way right here.
That's quite a
Yeah,
large
this
cause.
is too much. This is going to go
Yes,
into the
too much.
zeros, and I know the oil has tendency to go
Yeah.
below zero. But I think that, and I could imagine that even if I would be discussing with Bruce, probably, Bruce would say like, just be conservative, like take this count first, see where it's gonna go. I would suggest that this count goes to this point as a kind of like a sign of weakness type of count.
Mhm.
The second count would be the next formation right here, so could be below 90. And by the way, once we break 90, we're gonna have a stupid bar. We should have some kind of like, let's say like we go here, we should have some stupid bar going to like 80, something
Yeah,
like
there's
this.
a lot of white space for that move to happen.
Yeah. So, and that would finally bring a lot of the buyers into our camp, stating like, yeah, I could see how you called for 60 when the price was like at 100 and 120. It was not visible, but now it's visible. So this is going to be a know-it-all bar, and this is what's going to kind of like unfold. To me, though, causality is everything where they sell. They're selling here, and where else did we sell? Here. So my suggestion here for the horizontal count is going to be weird, really, really weird.
Oh, I like it even more.
Okay.
Right.
Calculate this as your segment one, and calculate this maybe like from here to here as your segment two. Combine them together, and that's your objective.
Okay.
I would still go first conservative, target number one, target number two, maybe even increase it up to here. So to the point of the supply, right? To the point of the supply. And that would be like my conventional way of doing this, and this would be unconventional way of doing this.
It was probably, yeah. I mean, as you know, I don't trade this time frame, but I think it's an interesting question, because this causality is, it's too large for oil.
Too large,
I mean,
yeah. Plus,
I
I mean,
think
like this is nothing. This is limbo. This is there is no buying, there is no selling here. So why would you get this into the? That's my biggest argument for the PNF counts right now. Like, why are we counting something where there is no activity? it doesn't make sense to me. So count only where there is selling. Where is selling? If we are trying to identify, distributional selling and distributional counting, then count where the selling actually happens. Because what are you counting? What is the purpose of counting a trading range? You want to count in accumulation the periods where there is a very deliberate CO buying. So you go to those periods. Where there is no buying, then why would you be even incorporating this into the count? So that I'm thinking differently here.
No, I like it. I like it. Thank you for sharing that, Roman.
Okay, let's go to your trades. We are actually at 10:28.
Yes, if you could give me
switch the
screen
screen.
control, please.
Okay.
Nope, that is the incorrect screen. Okay, so first of all here, Roman, I was coming into the market yesterday and we have a clear downtrend. Now, what's important, an important distinction to be able to make as this, I would say that supply is coming into the market in a big way. We're breaking the structure, we're breaking the demand line from this lovely trend channel, and we do so in a very, very meaningful way. I'm not thinking this is climactic action. I'm labeling this as genuine supply. And I think that's an important distinction to be able to make. Okay. Why do I say that? Well, because these down bars are kind of wider than the spread, wider than the channel from support, from the supply line. This is too much to be climactic. This is genuine supply coming in to the market. So coming in, I have a bearish kind of bias. Okay. So these are the two bars which were breaking structure. And then we have this trading range. Now, I noticed that we have this trading range. Yes, we have this kind of, little hidden spring here, and I still see supply. I see supply. I see supply. But then I see the buying off the lows, and then this down bar with this volume, and then it dips down to reverse and close firm. We have a hidden spring here at A, and I thought, okay, we're going to have a rally of sorts, probably back up to here. So I took the play. This bar, bit of a gut check. It dips down to reverse and close off the highs. It's like, ooh, it's a bit indicative of supply. And then here on this bar, Roman, we rally above here. I'm thinking, okay, limit order, 2-3 ticks under this resistance level, and then boom, look at this. Bar B here reverses all the way down. I exit +2 ticks to cover commissions, and I think that was like 56, 57 ticks on side. But the nature of this trading range, okay, I was thinking, well, it's got to be testing here, it's hidden spring, etc., etc. It didn't work out, and that's okay. That's the nature of that trade. Now, is it the best kind of player in the world? No, but I see the signs that were suggestive of a rally. I should have known here from this kind of deep testing. Something was a little bit wrong, but then when I saw this bar, I thought, okay, yeah, we're going to go and test. That didn't happen. Now, as bar B printed, I made the important distinction. I was like, okay, we just had a spring. It's kind of fouled its objection of taking out this previous swing high over here, or at least touching resistance. And I was thinking, well, what happens if we break this level? Do I let the market pull me in? Because I feel as if this low of this spring now is kind of a very important level for this market. But there, lo and behold, we rally here. Then we get this little hidden up thrust, and then we continue to the downside. And then that thesis come into action. I was like, okay, if we break this level of support here, underneath this this main level of support, I'm thinking I'm going to let the market pull me in. Why? Well, because this kind of, for me, was a kind of a line in the sand, because what do we have here, Roman, is that we have a trading range and we're building causality, and then we weaken the demand, we weaken the support line, and we can't test resistance, and then we're making lower highs. And also, if we break these lows, what do we have? We have a failed spring, which is also a sign of weakness, additional sign of weakness. Now, This isn't a failed spring I'd be trading because it's a failed spring, and that's a completely different setup because all of this action, there's too much back and forth here for this to be a failed spring. It has to, for my own trading purposes, has to happen within 3 bars. But the fact of the main, but the point being here, we have causality. Okay, we have a spring, it fails, we're building lower highs. If we break these lows, I want the market to pull me in because I think there's enough cause for a move to the downside. Now, a question I'm sure you may be asking, or some people may be thinking, is, well, how about this level here? Would you be thinking about finding demand here? And I would say no. You know what Wyckoff and Dams about support and resistance being too close to each other. This is the area of importance for me. If we're going to break this low here, I think odds favour, and we're making lower highs here, the odds favour that we're just going to break on through and go into the downside. So that was kind of this play pulling me in over here. Now, what do you think I did at 1 here, Roman? Partial covered.
Yeah, partial covered.
Partial
Okay.
covered. And I was thinking, okay, perhaps we could add potential contracts over here. It didn't happen. I like that. Why? Well, because the market's weak. It's unable to rally to resistance, newly formed resistance. And then I look at bar 2. Quite an important observation here. The volume is, what, a third less than bar 1. But the spread, I would say, is probably a third of the size or 40% of the size of the spread of bar 1. So arguably, we could say that we're not breaking support like we once did here or here. And due to the volume and the spread, it isn't kind of a clean effort versus result. But you can understand what I'm saying here, Roman. There's definitely buying in this bar due to the spread volume relationship. And I thought, okay, but we are still coming to we start breaking down to the downside. Then we dip under here on 3, and then we dip under here on 4, and I had to cover at 4. I mean, odds favour for me that we are going to have a rally of sorts, probably up to here, or if not, this little line over here. So then I'm fully out here at 4. 5, very interesting bar. I was like, okay, I was feeling very, very good because I was thinking, okay, look at this bar. We get a big wide spread, similar size spread as bar 4, half the volume, ease of movement to the upside. The only thing I don't like about this, Roman, is we don't break resistance, and we are trying to break through, trying to churn our way through all of this supply of I2. But, for argument's sake, it's still kind of a good bar. I read that as a good bar. And then, lo and behold, we fell here and we moved down. Literally, from here to here is another 150 ticks. Potentially, could I... Was this poor covering? Was this poor trade management? And this is what I'm here to ask you, Roman. How would you have managed this trade? Because here at 4, I think the market was highly suggestive that we're going to have a rally of sorts. And these are very large moves. Like, that's 100 ticks from here to here. So yeah. I've already.
Yeah. So this is a really good question. Because it kind of like I'm seeing this as a battle between like a more global structure to the more local interpretation. So let me kind of grab the screen here a little bit and just show you what I'm thinking here. So you should be able to see my screen. Yep. I thought this was a really great call here, William, on the strength of this decline, suggesting there is more to the downside. I thought that your comment also about how this bar is going to break the whole level was excellent. Yeah. I would probably be interpreting this as like, well, look at how many times are we actually testing this level, and more importantly, at the stopping action, at the selling climax here, what do we see? Close here, low here, close here, low here, low here. This is just a tail. This is just like the space where, there's not a lot of like touches of the support. So this is a less important support than this one right here.
Yeah, that's what the market deems to be of value, is my thinking. Yeah.
Yeah. So I mean, like, this was just such an excellent call. It was going to break through. Then when I was looking at the structure initially, this whole area right here is telling me that the timing of when we need to open the position is now. Why? Because volatility has increased. So relative to this, we're seeing how volatility suddenly is up. So what does it mean? Look at the directionality of the volatility. It's all to the downside.
It
The
is.
biggest down bar, then another one, then the break. And then, yes, we could have exhaustion of that volatility temporarily. And then that would suggest the rally. Yeah, I would be thinking that, yes, we are going to test this, this high. So the entry on the upthrust, right?
No. I
Oh,
didn't.
you were pulled
Yeah,
in. I would
I
be
had
thinking
a
like
position. Yeah, I had a
your
position
entry
for 8.
here would be most definitely there.
Yeah. Oh, no,
Mhm.
sorry. The position was pulled me in as we broke the lows of
Yeah,
8 to spring. Yeah.
yeah, yeah. And then obviously we're still breaking quite significantly. So here, just coming to the answer to the question, you're thinking that you have more to the downside with this break to the
Yeah.
downside.
There was higher time
So
frame structure between the lows of 1 and the close, but
yeah,
it's fine.
but you already comparing it to this, it's less.
Mm-hmm.
So there is a lesser of the downward result, which is suggests still we're going to go down, but now you have to kind of time it. So how do you time it? Okay, this break is less than this and less than this. So therefore, there is already selling exhaustion,
Mm-hmm.
and you're looking for the points of exit. Your volume signature is diminishing, so you are either looking for a much more diminished supply, but with the volume spike to exit, and then you're seeing how the upward result is increasing here slightly. I think this was an excellent place to exit. I would be doing the same thing.
Okay.
I think the question here also is like, relative to this breakout, what is, let's say, all of this? And to me, you could probably perceive this as a potential test. So if this is a potential test, then what kind of test do we have here? Is it a strong test? I mean, like, it's still in the lower part of this bar. Everything is lower here. So
Mm-hmm.
maybe here the idea is that there could be more of the continuation as a potential leg to the downside. There is, if this is a breakout bar, so the high of the selling zone is somewhere here. So I wonder, the only thing that I could think of, William, is like, if your stop loss is slightly above this, and you kind of go through this, maybe like trim here, and
Yeah.
then keep maybe like 1/3 left, and then it could take you down. So then your probable next exit is going to be either somewhere here or somewhere here in this area.
I mean, it's quite interesting because as this double kind of 3 and 4 unfolded, I was thinking, we are due a rally of sorts. But then I
Yeah.
was like, would I take this spring? And I was looking at the background. I was like, wow, there's so much supply here and here.
Mhm.
So I could have talked myself into holding some, but I knew the market was going to have a rally of sorts. You know, it's just one of those kind of decisions I had to make. And I thought it was because this is still quite a substantial move
Yeah.
to the downside. I
And,
mean, I
and I
didn't
think
catch.
it's, William, and I think it's a very common thing that we all have to go through.
Mm,
A long-term still bearish, short-term shows this, a potentiality for the rally. So what do you do here, right? So I thought that your decision was pretty good, right? So exit here, and then the only thing that I would be thinking, like, for the longer term bearish case, leave a little bit on. And then you and I were always kind of like, have this conversation. Where's the stop loss? Is it should be here or should it be here? And I think that your stop loss would be here. Am I correct?
yeah, I mean, yeah.
So yeah, if you keep that stop loss, then you have another 2 opportunities to like decipher like what's going on here.
Well, the thing is, I know we shouldn't really get concerned, but from here down the lows to up to here is such, it's
Yeah,
nearly
yeah.
200 ticks, 150.
But
It's
I mean, look at the background.
yeah, I know the background is uber weakness, and we break
You know,
down.
you still have to have like the breakout of the same magnitude. And I would say like if I would be thinking this is probably not, this is just related to this. This is probably the next breakout, and this definitely shows like I'm
Yeah,
very
this is where the conditions have
hmm
changed. For sure. We're not
yeah.
breaking down like we
hmm
once did.
And
For
then
sure.
it's a much longer duration of the trading range here than
Mhm.
here. This still looks a little bit volatile, especially after bar number 5. Like, look at all of these bars that are coming in, coming
Yeah.
out, and like this is still like showing like, oh, I'm still bearish. By the way, would you be thinking here, like if you close completely here, would you be thinking maybe of re-entry here?
I was looking for a entry. I was waiting for the
Mhm.
rally, and then as this unfolded, and I was like, oh, there's nothing. I don't think there's anything clean here for me. Look, the volume,
Yeah,
there's no clean signal for me.
yeah.
Even though we can see it goes 150 ticks to
Mhm.
the downside. Look at the spread. The average true range is still huge, 50, 40 tick bars.
Yeah.
It's not very
But I
favorable
would
trade.
say, William, such a great trade. And as always, we would say like, what is our goal? Our goal is to take 50 to 80% of the trending environment of the trend. That's our goal. And then, of course, for those of us who are extremely crazy, like find the bottom and find the top, and just go for all of this. But this is the story that we only can discuss in the tape reading lab, just because every other class is just not going to be at this level. So,
But looking in hindsight, that feels like kind of a weak spring with this. I know I was aware of the selling.
mhm.
I just thought we was going to have a rally. Anyway, this is trading, isn't it? It didn't occur, but well, the rally occurred, but
The
there's so
background,
much
right? The
fighting.
background kind of would define the strength of the spring or the rally out of the spring.
Yeah, it's very kind of a. Okay, perhaps it should have been around this
Mhm.
first resistance level, but that's
Okay.
trading.
All right. We are at 10:45. William, let's quickly look at the market just as the last thought. What are you thinking now?
So we tried to break them through. Now we're breaking down. Good volume. Are we erasing the? Oh look, we are kind of erasing this. Closing under the lows of this breakout bar. That's not healthy. Shouldn't really be doing
Mhm.
that. We did test very deep here. Kind of tested deep here. Okay, we are. Okay, the nature of this is we're trading well under this, Roman.
Mhm.
Uh,
Well, we did say that expectation is that we're gonna come back
yeah,
below the resistance.
maybe we
So
could be right
I
down.
would be thinking like, are we gonna do a high low or are we gonna break into the lower low right now,
Hmm.
into the end of the session? Are we breaking the support or are we staying here?
It's a very. We're going to see. What time is it now? Oh, they're just coming back from lunch. So 15 minutes before Wall Street
Hmm.
come back from lunch. So so this is actually a counter trend move during the lunch hour. Kind of would expect that. I mean, there's no overt selling there, Raymond. I don't like the way that we are retracing that breakout bar though, which is the
Hmm.
weakest of the breakout bars. I just need to see a bit more information, to be honest, and
Yeah,
see how
yeah.
we interact at the
Okay,
resistance.
well, I think that, William, we probably gave enough information to our listeners, watchers, to make that type of decision into the end of this session. So you heard our opinions. If this happens, then this. If that happens, then that. And with that, I think this is the end of our session. Thank you guys so much. I mean, as you could see, we are really kind of like freestyling, just putting the charts on. And usually this is like the consistency of our charts. We're just going through all of the major markets. We do go through some of the exercises. We definitely look at some of the trades that we make on both sides. And that's about it. So basically, it's just kind of like a dialogue between William and
Mhm.
William and I, and We enjoy this. It seems like our students enjoy this as well. If you enjoyed it today, join us. And each week we will be discussing the markets. William, anything else to add to that?
Yes. No. Well, thank you everybody for attending, and I thoroughly enjoy these sessions with you, Roman. We really get to the nitty gritty of pure chart reading in a way, and also that we do have studies as well, don't we? We do pick a stock and we can go through our bar reading. We can
Yes.
dissect and we can
Yeah.
go through a chart with a magnifying glass,
Mhm.
come up with all kind of theories and theses. Really is a way to expand your bar chart reading and your overall general understanding or sentiment of the indices and the market as a whole. So
Mhm.
they're kind of freestyle, aren't they, Roman, in a way?
It is freestyling, yes. All right, guys, with this, if you have any questions, email us at wyckoffAssociates@gmail.com. Reach out, ask questions, and then you will definitely answer. And specifically for this class, is this a bar by bar course? Alexander is asking. Yes, we are discussing this each time. You could also explore some other products that Wyckoff Analytics and William has. So with that, thank you guys so much, and we'll talk to you next week, next Wednesday. William, thank you.
Excellent. Thank you, everybody. Have a great trading week, and thank you very much, Rob. Take care now.
Bye-bye.
Bye.